All right, welcome everyone. Welcome to today's live stream with Dirk from PrimeXBT Academy. Very happy to have you here, Dirk. How are you doing?
I'm doing great. Happy to be back, especially in a week like this, where we're probably going to see some insane volatility tonight and tomorrow.
Yeah, and why is that? Why do you think we are going to see a lot of volatility?
Well, first of all, tonight we're going to have the release of the FOMC minutes. So this one is a kind of a biggie because it's probably going to show how aggressive the Fed wants to maintain their policy of raking hikes and especially also maintaining hikes at a higher level for longer term. For a longer time period. I think on our last live stream we kind of spoke about this a lot. I think for me the more important event actually is going to be tomorrow with the release of the US inflation data. That is for sure going to be probably, in my opinion, the defining number for the rest of the year, at least when it's not coming in as expected. And I actually found some stuff that makes me think that we could be in for a nasty surprise there.
Interesting. So for the by the way, guys, I just want to say a huge thank you to PrimeXBT who's sponsoring these live streams. You can sign up using the link in the description below, and if you use the code, you get up to a 7K deposit bonus. So definitely check that out. And I've managed to secure even better discounts. So if you are interested in that, I have about 5 codes ready. So you can DM me on Twitter, and I will send you that. And as always, you should definitely follow Dirk and PrimeXBT Academy. They're on Twitter and YouTube. So PrimeXBT Academy on Twitter and YouTube. Check that out. Very good analysis for sure. And right, so for people that are watching this and they're completely new, could you maybe take a minute or two to describe what the FOMC actually is and why?
Yeah.
Because what's going to happen now on Twitter is like today we're going to have everyone's going to turn into an FOMC expert, right?
For sure, yeah. So basically, the FOMC is the short term for Federal Open Market Committee, which is the regulatory board of the U.S. Central Bank. So basically, they decide how they want to reach their goal of maintaining a certain level of price stability. So that is the main goal of most of the central banks out there, to have something of an inflation rate, a yearly inflation rate of around about 2%. Right now, as probably everybody is aware, that has to buy gasoline, that has to buy food, pay rent, maybe the inflation rate is much, much higher than that. As a matter of fact, we are expecting tomorrow the number to come in at 8.1%. So it's overshooting these 2% by quite a margin. And one of the key points or one of the key tools this Federal Open Market Committee has to work against high inflation numbers is by manipulating the interest rates. So they can, for example, say, now they have done so a couple of times this year already, in the US, if you are a bank, you want to park money with us, you want to loan money from us, instead of 3.75%, you now have to pay 4.5%. And this tickles down the economy. So if you are, for example, buying a house in America and you want to have a mortgage, 6 months ago, you probably would have gotten this mortgage still for 2%. Now you have to pay something like 4, 5, or even 6% already. So by this, they can slow down a little bit the economy, bring inflation rate down again to 2%. However, it doesn't really always work as intended. And you might have noticed that already, when you, in your country, wherever you watch from, you have like experts who are trying to forecast how much the economy is going to grow this year. And normally they are never right with their forecast because it's a complex system. And this is also the challenge, of course, the central banks face. Now, they have been quite slow, the market has kind of the market participants have the opinion actually that worldwide the central banks reacted much too slow to the rising inflation. I remember, I think a year ago, it was something like, oh, inflation is going to be transitory. Was like the key term Jerome Powell used there. He's the chairman of the Fed. And turns out now it's not transitory. It's probably here to stay, at least for a while. And of course, now everybody is going to look at, are they going to stay as aggressive as they were last time? Or is there maybe a slight hint that, hey, next year in 2023, we might see falling interest rates again? If that is the point, if there's such a slight, note that maybe there's a spark at the end of the tunnel, at the horizon, that interest rates could fall again in 2023, then for sure we would see stock markets booming. So we would switch immediately to a risk-on metric, meaning risk-on situation, meaning stocks would rise, cryptocurrencies would rise, the US dollar would fall. So you would see euro dollar, for example, going up, the US dollar index falling. So it's going to be very interesting. However, I think really tomorrow is going to be more important. We are for sure going to see volatility tonight. However, in my opinion, tomorrow, really the real inflation data, this is the number to look at. Oh, I think you turned your mic off, man.
I did. Thank you. So basically, FOMC minutes, if you go through a site like, for example, DailyFX or Financial Juice, where you have economic news releases, the calendars, you'll see that you're going to have for Great Britain, for the UK, you might have interest rate decisions. So the Bank of England interest rate decision. That's the name of the economic news release, basically. But in the US, you have the FOMC, right? It's during the FOMC where they discuss and they announce the interest rates changes, basically. And right now they're hiking interest rate because they want inflation to be at their target of 2%. Like you mentioned, you're at around 8% right now, which is huge, and real inflation we know is much higher. They want to push that down to 2%. In current conditions, there are actually discussions from experts talking about this might be the end of the 2% era, where they're going to have a very hard time actually reaching that 2% inflation going forward. Now, that's another discussion, probably won't happen, but it's interesting that this discussion is going on. It basically shows that we have problems around the world in the financial systems, and this is a great example of that. It's a lot of people are suffering, and so that's the FOMC, and that's why it's very, very important. And the reason why the FOMC is much more important than the Bank of England interest rate decision is because America is basically the biggest economy. Whatever they do in the US will affect the rest of the market. You're seeing now the strength of the USD is basically it's not good for the rest of the world. It's great for America in that sense of the currency, but rest of the world, they're kind of suffering. So America is right now the king. That's why FOMC is very important. Let's talk about the inflation rate data when it's coming out tomorrow at 14:30 our time, which would be 12:30 UTC. What do you expect here, and what type of different scenarios do you have in mind here?
Maybe you can share my screen a little bit, because I'm going to bore you guys now a little bit with fundamental facts, but I kind of want to show you, how as a trader, with like things you can find by yourself on the internet as well, how you can prepare for an event like this, because it's very important to know, like during an event like this, probably the day prior to this, also it's kind of hard to rely on indicators. Because we are going to see huge volatility, and it's all dependent on how the number is going to be. So let me maybe summarize here where I'm coming from. So I said for many, many weeks now already that I kind of expected the S&P 500 to somewhere land in this, I call it soft landing zone, at around between 3,400 and 3,600 points. And we've touched that zone now. We bounced off here one time, as you can see. And this resulted from this election pattern I found that the stock market largely behaves the same as it did under Donald Trump, after Donald Trump was elected. So the first 2 years after Donald Trump was elected and after Joe Biden was elected. From this, I said a couple of months ago, we probably are going to see the low of the stock market probably late November, early December, mid of December. And back then I said, I think my estimation is that it's going to be somewhere between 3,400 points and 3,600 points. However, we've already reached at least the top of this target, the 3,600 points. So the question now for me is, of course, hey, we still have, a number of days left there. We still have like roughly 1.5 to 2 months left. So what is going to happen in between? We're probably going to go sideways. So I was thinking, like, what could be the catalyst maybe for us undershooting this target? So maybe going even down to 3,200 or maybe even 3,000 point in the S&P 500. And in my opinion, it could maybe be really the inflation data we are going to see come out tomorrow. And for that to understand and how to approach this, you have to understand really what is measured there. Of course, probably you guys know, inflation data means how much more expensive certain goods and services are in comparison to what they were a year ago. So we're going to compare here September 2022 to September 2021. And interesting here is this basket, how inflation is measured, consists of numerous items, actually thousands of items that are in there. The biggest 3 parts that influence the inflation the most, however, are housing with 42%, transportation with 18%, and food and beverages with 14%. So I think that's quite interesting. I always would have thought like, okay, maybe food and beverage is like higher than a percentage than, for example, housing or especially transportation. And if we look then into the details, so all this data you are seeing here, this is publicly available by the US Bureau for Statistics and Internet Research and so on and so forth. So you can really, try to do this for yourself at home. Now, what interests me here the most is, of course, to kind of research beforehand already how especially housing has developed. For example, over the course of the last year. And for that, I looked at the rent report here by this web page called Zumper, I don't know how to pronounce that. And I wanted to have a look here at the 5 largest cities in the USA and see how has the rent for 1 and 2 bedrooms apartments developed. Why the 5 largest cities? Because they make already up almost like 6 to 7% of the population of the USA. So you get a good overview in different geographic areas of the USA, how prices are developing in rent. And what I see there really surprised me in a bad way, because for cities like New York, which is the largest city, of course, in the United States with 9 million people living there almost, we see the prices for a 1-bedroom apartment in the last year, in the last 12 months, has risen by 33.9%. In the last, for 2-bedroom apartments, by 40%. And if you go down the list, look at the second largest one, for example, which is Los Angeles, 17.6%, 14.8%. If you go a little bit further down and you look at Chicago, 3rd largest city, 26.4%, 25.7%. So this is way above these 8.1% we are expecting in terms of inflation data. And we are talking here about an item from the list of goods that is has the highest influence on price. And quite honestly, when I saw this morning, I thought like, we might be in for a hard ride there tomorrow, because the rent has risen by so much. And it kind of surprised me, at least when I first looked at it, because mortgages have gone up, the interest rates have gone up so far. So you might expect actually that housing gets a little bit cheaper. But this is only true probably for houses that you want to buy, because a lot of people have lost their houses again because they cannot afford mortgage rate anymore. And these people also come onto the renting market. I mean, they need to live somewhere, so they need to rent an apartment. So there's a higher demand for rental apartments, driving prices up. And it's the same with many other items from this list. If we look here, for example, at new car prices, which is one of the largest goods for the transportation part of the whole basket. So we're talking about the 18% here transportation. New car prices have gone up by, let me see, I took note earlier here, but I don't know where I put my stuff. I think it was by 17%, if I'm not mistaken. So a very high rise there as well. If you look at, for example, here we go. Here's what I took note of. If we look at prices of gasoline, for example, also, you have to pay 17% more than you did last September 2021 if you want to fill up your car. And it's the same really, with some exceptions all over the board. So one of the exceptions, for example, is here domestic airline fares, which only have risen by around about 5%. And, you know, if I see things like this, I really wonder if maybe the number is going to come in much higher tomorrow than we are expecting. Maybe we're going to see something like 8.5%. Maybe we're even going to see something like 9%. And if that is true, we're going to see massive sell-off. So we are going to, for sure, have a crash in the S&P 500 in all the stock markets. I wouldn't be surprised to see 3,400 very fast. We're going to see massive dollar buying. So euro dollar probably going to be very quickly at 95, 0.95 that is. Dollar index is going to rise. We're going to probably also see Bitcoin then finally going through the support area between 17,500 and 18,500 US dollars. And you can also see this in Bitcoin. If you look at the Bollinger Bands here, how close they are together. So this, I always like to call this a Bollinger Band squeeze. It's one of my most reliable signal, because whenever that happens, it's just a matter of time until you have a volatility breakout, either to the north or to the south. We don't know that yet, but everything I'm seeing, and normally I'm more of an optimistic person. You know, I expected the turnaround already happening now or early to mid-November, but I wouldn't be surprised if this is the catalyst that drives us into this capitulation phase we are still missing on the markets, where everybody just in panic is going to throw out risk on asset stocks, cryptocurrencies especially, and which then is probably sooner or later going to mark the bottom.
Yeah, I mean, this is first of all, I just want to say very impressive analysis. I really like what you've done here. Looked at the rises in the housing market as well. Very interesting, and really enjoyed that breakdown. And this should be. I mean, it's not going to have a good effect on our on a personal economy, most likely, if this plays out. But it's also exciting because you're talking about a potential capitulation phase here, and that's what we're looking for. That's what we need. That's what we're looking for. And if I bring up my S&P 500 chart, this is something I've been watching for a long time now. This lower level reload zone here is more of a comparison for the 2008 financial crisis, how much we fell during that crisis. And we're actually, if like I'm looking at this area between 3.2 and 3.5. That's a very interesting area for me, purely from a technical point of view. If we do come down here, we're halfway. We're actually halfway through the crash that happened in 2008, and even at that point, we have a lot of stuff going on with the war in Ukraine. Like, imagine if stuff gets even more worse down here. So a couple of months ago, it was very hard to imagine the S&P trading down here, right?
Yeah.
Very few people talked about this. Very few people talked about this. I remember we talked about it in some of our first live streams we had. We talked about the potential of this escalating. I also know that you were not bullish, but you were interested in seeing like a soft landing. It looks increasingly difficult to see the soft
Yeah,
landing approach
absolutely.
play.
Yeah.
So I'm definitely with you, and if the S&P 500 breaks, these current lows right here that we're seeing a double bottom. And of course, if the FOMC comes out and something unexpectedly bullish happens, yeah, I mean, this is most likely going to be the bottom, right? But if the S&P 500 breaks down here, most likely I'm seeing Bitcoin breaking down here as well. So we can remove some levels here, and from a high time frame perspective, I think that's what's needed. So it looks to me quite probable. I mean, we're looking at the S&P 500 here on the 4-hour, but because of the fact that if the S&P 500 breaks below a significant level, most likely Bitcoin will follow in a more aggressive manner. So if the S&P 500 breaks these lows on the 4-hour, I think the probability of seeing Bitcoin actually breaking this support here around on a daily, I guess you have to incorporate that wick, but it's like somewhere around here, right? I think it's highly likely that happens, right? Of course, we're probably going to get a bounce here, but if if this situation continues, we're probably going to break down, and that would probably be the capitulation that we're watching. And I mean, from a technical point of view, there's some very interesting levels here. I mean, you have that high right here. We're currently testing this the all-time high from 2017. We're testing that right now, and then below there we have a very clear level, and then we can't really ignore this level. I mean, we have to take this into consideration. And now imagine if the S&P 500 does really break down like a proper high time frame breakdown here, and maybe trade down to the 3.2, right? 3.2 level. Now I think Bitcoin might actually break below the 16K level if that happens. And if that happens, I remember trading. I remember Bitcoin here, right? So when I started developing my trading system was in 2018. That was around this level right here. I remember trading Bitcoin around this level, and I remember thinking that this is the bottom. Like, this is the bottom, and then this happens, right? And that was just the most extreme move. That was such a huge capitulation move. That was 50% lower than where I expected the bottom to be. So I expected the bottom to be around here, and then we had that 50% move lower. So very few people expected this move, and very few people expect the move down to 13K or something like that. And I think we have to be open to the possibility of that actually happening if the Fed can't control inflation. I mean, we have two major situations here. We have the Russia-Ukraine war and inflation is skyrocketing. If they can't control inflation and the situation in Ukraine gets worse, and then we have China and Taiwan, there's a lot of stuff going on around the world, which, if escalated, could really make the market tumble.
Yeah.
And
we have a situation like 2008 also, with banks on the brinks of collapse. I mean, look at Credit Suisse in Switzerland. No?
And the pension funds in the UK. The governor of the Bank of England came out yesterday and said you have 3 days to rebalance, right? So they told the pension funds, like, you have 3 days to solve this problem.
Yeah, they even had to do like a mini Q quantitative easing there for a couple of days. Otherwise, he said, the whole system would have collapsed. And we're talking about pension funds. We're talking about, your money for retirement if you're a UK citizen. Imagine that.
Exactly. So the problem was over leveraging, right? So just like in the 2008 financial crisis, where basically that was a little bit different, but they were definitely over leveraged back then as well. And now with the pension fund just having massive leverage in the pension funds as well, and none of the risk managers in the pension funds, ask themselves, what if we have a recession? Will we survive a recession? It's like nobody thought about that. Nobody thought about that, because if they would understand that obviously the insane high leverage that they're using people's pension funds would be in trouble, right? It's like no, and it came out of nowhere, you know.
For me, kind of surprising actually. I wasn't aware that pension funds actually are leveraged at all. I would have thought like they are like very conservative in the assets they pick.
Yeah, I thought that as well. But then I remember watching Bloomberg yesterday, an interview with somebody on Bloomberg, and he's like, the leverage is actually quite high. You know, I'm like, what leverage? Like, you know, what leverage? Like, and it's like they're using very high leverage. And I want to go back to the dollar currency index right here, because this is exactly the chart that we looked at in our last live stream, and that was when the S&P 500 were trading, I believe, right here.
I still have the trade open, by the way. There, I opened a short trade last time. Yeah.
Awesome. Yeah, I mean, we talked about you talked about shorting the dollar currency index right here. I never did because it's just not part of my system. But it definitely, we talked about how it's a definitely probable trade to take. And I also talked about if this would be the top of the dollar currency index, we would have a very good support right here. So the idea that we had on our last live stream was basically we're probably going to see a risk on push here, and that will be temporary and end here. And that's exactly what we saw.
Yes.
So the analysis played out, and the fact that we bounced here also played out. I failed to trade that. I didn't find any good entries on risk on positions. I basically failed to trade that, unfortunately. But it's interesting that it's a good example of how technical analysis and trading is just not the same thing. You can be very good at technical analysis. You can be a very good analyst. That does not mean you're a good trader, right? Because analyzing markets is quite simple. You know, you see a trend, you see support, and you're going to say, oh, I think it's likely that support is going to act as support. I mean, everyone can do that. Of course it's likely, right? But then it's up to you as a trader to execute that idea. Where do you enter? Where do you have the stop loss? How do you manage that trade? And do you find, like, do you have, you know, trades that are in correlation with this idea and stuff like that? So that was a good reminder to myself last week when I did my journaling review this weekend, that just because you're doing your analysis correctly does not mean that the trade is going to work out. You really have to accept the fact that
you know. But to be fair here, I mean, I remember we also said like it's really a high risk trade because you are trading against the trend there, against a massive trend. So it's not. That's why I actually only took it here on the paper trade functionality of TradingView, because I wanted to be reminded about this trade for today's live stream to catch up on that. But and it's it was a high risk trade, nice risk reward on that, but still in reality I also didn't take the trade. No.
Yeah, it's you're talking about the short up here, right?
Yeah. I mean, you can share my screen here very quickly when we can.
Sure.
So basically, I think it was based off a question, if I'm not mistaken, we had last time from a viewer, where I said, well, I have this actually confirmed here on the RSI. There's a hook forming, which was basically down here. So I charted the market here at 113.55. Normally with this system, when I use that, I would, once we reach the middle Bollinger Band, put my stop loss to break even, or maybe a little bit lower than break even. This case, you know, that I basically do not risk anything on the trade anymore. But here, because it was a demo trade, I decided I want to hold on to it. I want to see what happened. But yeah, I think a good example of, even, you know, in trending markets, you can find the occasional trade against the trend, but you have to be disciplined when, like you just said, Lib, to set your stop loss. And as I also just said, this is not a trade I took in reality, because I think following the trend here long term is more like this. On the contrary, I actually am always looking for opportunities to, for example, short euro dollar, so to buy the euro dollar at the moment.
Yeah, I'm. Wait, so you're looking at? You said you're looking for opportunities to buy the euro dollar. No.
No, short it. Short it.
Yeah.
I shorted it numerous times when we approached 1.0 in the last weeks, I can now say already, and it has always been a good trade. And I see, like I just said, probably if really what I kind of am afraid of is going to happen tomorrow, that the number is going to be higher than expected, well, then we have our scenario that we very quickly are going to all-time lows for euro dollar.
Yeah, same here. I think we let me show my show. Like I looked at an idea on euro, and I really I thought it was just such a perfect level. I remember looking at this this level right here, and thinking, and this happened, this was that risk on push we saw when the dollar currency index got rejected at resistance, and then this is what we saw when it bounced. So this was the one of the idea I was looking at to trade, right? So I looked at the dollar currency index, and I'm like, we have a bounce here, and if that coincides with the rejection at this area for your USD, I would want to take that trade. But I don't know, I not sure why I didn't take this trade, but that was a very clear. I mean, it didn't really align perfectly with my system. That's probably why. But it was such a clear, rejection, really. So I did like.
But the move, to be fair, was very fast. I remember we went very quickly from 0.98, I think it was, up to 1.0. So I almost also didn't react to that. I did short some stuff there. Actually, I sold some options there, some call options to speculate on falling prices again, but. It was hard to, because when a price swings very fast up, it's also hard to find the courage to really short it, then to execute your plan, basically, because you're afraid like oh maybe it's going to continue to 1.01 or 1.02, and so that's why I usually choose options as my vehicle, because they give me a little bit more flexibility for that.
Yeah, I'm really interested in getting into the options trading. I have, like, honestly, very little experience. Well, basically zero experience with options. I've been going through it. It seems complicated, but it seems like there's a lot of more options. I mean, you have a lot more freedom to kind of there much more like different ways of trading, and you can trade in a very different way. However, I'm really liking the way I'm trading now, but definitely the option would be something for me to look into more in the future. Is there any trades you were talking about your USD and shorting that? Is there any other specific trades you're looking at currently?
No, I'm at the moment for this week. I'm totally flat. Like minus, of course, long-term positioning, like talking long-term stocks investment, long-term Bitcoin investments. So this is, of course, totally unaffected. On the contrary, for that, I actually would be happy if we go lower, because I can buy some more cheaper for my long-term positioning. What I'm going to do probably tomorrow, and I'm not doing this very often, is that I'm going to trade the news, and I'm going to position myself before the news, and I'm probably going to position myself short S&P 500, short Euro US dollar, and short Bitcoin. I'm probably going to rely on the S&P 500 for that trade, because I'm still not sure about this support zone here at 17.5 to 18.5 thousand US dollars. But I'm going to do this with a very, very tiny position, because the risk reward will be very high, in my opinion, on this trade. If I'm correct with what is going to happen, then the upside is going to be huge for those trades. So no need to risk something like 2 or 3 or 4% of a portfolio. I'm really talking here about 0.1 to 0.2% of my total portfolio, because
you want to enter the trade, and you want to put in orders before the event. You don't want.
I'm going to enter the trades before the news come out, because once they are out, the genie is out of its bottle, so to say. The move is going to be immediately, and if I click then on sell, I don't know where I'm going to be executed, because things are going crazy. And So this is what I'm going to be. It's of course going to be an extremely dangerous trade. I'm aware of that. That's why I also say normally I'm not doing that. But somehow this time, after everything I've looked at in the last days, I'm feel kind of supported in my idea that the number is going to be worse than we expected. If I'm wrong, well, then I'm wrong, but I'm happy too. If inflation is coming in lower as I expected, well, great. We're talking. That's why I said we're talking about 0.1 to 0.2%, but I'm going to risk on those trades in comparison to my long-term stack, which is, of course, much more going to profit from if the inflation number comes in lower, because that means we're going to boom in probably the S&P 500. We are going to probably see Bitcoin also very quickly over 20,000 again then.
Yeah, that's very interesting. Last FOMC, or I believe it was the last FOMC, I traded Bitcoin during the news release, and that was actually quite successful. So basically, the idea, I remember watching someone live trading a couple of months ago the FOMC, and he had a phenomenal track record trading the news, and basically he had a very simple strategy. He as soon as the press conference started, or maybe so they have. With FOMC, they have first an announcement and then a press conference, or is that with the inflation data? That's the FOMC, right?
That is normally with the interest rate decision. I mean, the FOMC minutes are basically just publishing like what was talked about. It's like a protocol amount.
Yeah, so it must have been the inflation, the CPI. So basically, what I did was you have the inflation data coming out, and then 30 minutes later you have the press conference. So the idea was to fade the initial move when the press conference started, right? So if you had the data coming out and that was a small pump, when the press conference started, you shorted that pump. And it worked out great. I mean, you had it like last CPI, you had a dump, and then the press conference started, and you went all the way back to the top of the where you were in the announcement. And if you looked at the 1 minute, you could have scalped that quite successfully. So that
you very often see these V kind of shapes, like initial direction, then eventually the price actually comes back to where it started before the release, and then it dumps again. That's really quite common.
Yeah, so I'm actually thinking about trading that live tomorrow.
I will
try it out with a small position. Gonna try to trade that live. See what happens during the. Yeah, it's gonna be interesting. Definitely gonna be interesting. So I think it's interesting that you decided to be like flat the whole week, and I think that's a very good approach. I usually trade that way as well, but I've started to try last year. I've tried to optimize my strategy for news events, and basically the whole idea with that is if, let's say, for example, I'm long Euro USD and we have the FOMC. So let's say the FOMC is coming out in 1 hour and I'm at entry on my trade. I would then just exit the position at break even, because I obviously don't know which way the news is going to take the trade. And the technicals of the system is basically flawed when there's a unexpected event happening. It could mean that that's the catalyst that would reverse the trend. So that's what I've been working on for the last year, to try to incorporate the news events as a added risk of the trade, and then manage to trade accordingly. But then what I've done the last couple of months is I've back tested my system without taking into consideration the news event, right? So I'm just looking through historic price data. So I've back tested all of the majors and the minors. That's about 40 pairs. So 40 pairs during a 12-month period. So I think I got like 300 trades, which is quite a big number, right? Very big number. And I've seen that the success rate is actually very good. And I'm just ignoring the news. So the question is then, if I have the data, if I have the backtesting data, 300 trades, impressive results on the backtesting data, does it make sense to take the news into consideration if it's not part of the backtesting? What do you think?
Oh, that's a question. I mean, if you backtest on 300 trades, how long was the backtesting period there? Like a year, or what is that?
I think about one and a half year.
1.5 years. So you have sufficient data, and you have all those different scenarios the market is going through. You have important news coming out that are disappointing because they are worse than expected. You have news coming out that are surprising, better than expecting. And through all of this, your system is stable, makes you profit. So for sure, you can ignore it then, yes. In my opinion, this is what backtesting is all about. Absolutely. If you have that, I come, of course, here from a different direction because I rely a lot on fundamentals for my trading. So obviously, this is like kind of more important for me. But this is the beauty in it. We have like two different approaches that you can choose for trading, and always lead to Rome. I think that's the saying, at least in German. I don't know if this saying exists in English, and you can be successful with different approaches. And I absolutely love that you just showed, hey, my system works, is stable through good times and bad times when it comes to fundamentals in the market. So why should you rely on the fundamentals then? You can just ignore them. This is a beautiful position to be in my opinion. I'm kind of getting actually jealous.
Yeah, but it would be a big transition, and it's really hard because I've been trading with this assumption that I shouldn't trade through news events for all these years, and it's a big transition, and it's also I'm trying to figure out an effective and good way of testing this, but it's very hard because the only way that I know of right now is to go through the back testing. Right? So let's say you find the trade in July this year. So what you have to do is you have to go to the economic news calendar, check that date. Is there any news event before you can before you can put that trade into your backtesting template? Now imagine how much time that takes on 300 trades during a 1.5 period. It's probably going to be taking, if putting in that trade data into the backtester is takes like 1 minute, it's probably going to take 5 or 10 minutes, which means 5 or 10 times more time doing the backtesting. But it's always worth it though. It's always worth it to get that data. So yeah, I'm thinking about it. Maybe take, on the weekends, sit hours.
I mean, if it turns out to be true, and you come to the same result again, then it doesn't really matter the news for you. Well, I mean, it takes a lot of stress off the shoulders then, no?
It does, because like as you can see on my chart here, I have this indicator which I'm developing, and my plan, and it's so amazing because when I started trading, everything was just overwhelming. It's just a lot. It's just very complicated, and I had to spend a lot of time scanning the markets and taking the trades and managing the trades. But then, the more I traded, the more simpler my system got, and my whole trading becomes much more easier. And now I'm at the point where I'm literally what I'm going to do is I'm going to incorporate all the indicators that I'm using into this indicator. So it's just going to look like this, right? And the stochastic RSI, I'm not even going to be needing the stochastic RSI most likely because it's incorporated into the signals. So this is going to be all I'm watching. So everything that 4 years ago was super complicated with a lot of lines on the chart is basically now all comes down to this indicator, which I'm just super proud of, because what it does is it gives me a signal, right? So it gives me a signal and it gets forwarded to Discord with a chart. So I can pull up my phone, look at the chart, and I can quickly see if it's a trade worth taking or not, which means zero market scanning. And if I don't have to care about the news, I don't even have to check the news. And it happens on the 4-hour candle. So only during the time around the 4-hour candle close do I have to be available to trade, which is, for me, that's the dream. I can walk around at home, do nothing, and then just get the alerts on my phone, and if I like it, I take the trade. It's amazing.
This really is the dream, no? I mean, like when you see out there people that actually earn money with trading, or people that are pretending to be like trading millionaires out there on Twitter, they always advertise this lavish lifestyle, that they have all the time to hang out in the pool, party with girls, or and so on, drink champagne, travel the world. When in reality, very often this profession is the other way around, where you spend a lot of lonely time in front of screens and talk to nobody, and feel like you are a chart nerd or a fundamental nerd. in my
Yeah, for
case.
sure. I mean, it's it's so much work. I mean, yeah, it's
freeing up your time. I can only congratulate you, and this looks very promising. Actually, you should sell this actually, or rent it out.
I'm probably not like first plan is to make him, like, first priority is for this indicator to be my trading companion, like my own trading companion, and help me in my personal trading. And if and of course, the signals from the indicator, they're going to be forwarded to my Discord server, which I'm opening up a community as well this month, so people will get access to the signals. It's not buy and sell signals. It's not like you get a signal and you sell immediately. You have to. It's a scanner tool, right? So you get a long signal. Like none of these signals are trades. This one is not a trade. This one might be a trade. That's not a trade. So it's a scanner tool. When you get the signal, it tells you better look at the chart, right? And it gives you on every 4-hour candle throughout the crypto and forex market, it gives you like 1 to 4 signals, so very few signals, and on average it gives like somewhere between 1 and 4 swing trades a week, which is for me perfect. But if I can, I'm probably gonna give people like direct access to the indicator. But it's going to be part of my trading program, because you can't trade. Remember, this indicator is like my system in a very simple visual form, but there's a lot that kind of goes into taking a trade.
But I mean, this is such a perfect example, really, of how you should approach trading. You educate yourself. Maybe you then find something out there, that suits your personal style, your risk reward appetite, your eyes also. Everybody is attracted by different visuals, of course, also. And when you find something, you backtest it, you see that it works, and then you try to automate it in a way that it saves you time. And this is exactly what you did here. Now you get the signal, you get the chart. I think you said send to Discord. All you need to do is like to look at the signal and determine, is this really a signal, or is this not a signal? So it saves you probably hours and hours of manually staring at charts.
Yeah,
especially monitoring something like 50, 60 forex pairs.
Yeah, I mean, I never thought I was like, I honestly never thought I was going to get to this point, because I always saw like algo trading and automatic trading like something very advanced. But now I've understood that it's not about having a machine trade for you. It's just it's all about making the process a little bit simpler, right? Just making it a little bit easier, and just helping yourself just a little bit to make it a little bit more effective, and to have tools like this one or whatever, and to just make your life as a trader a little bit better, a little bit more simpler, will help you most likely in trading. I mean, if you look at like there's a lot of like what I can show an example, like a trade I'm in currently on NCD CAD. So what happened this morning is this morning I woke up and I saw this alert on my phone. So I'm watching the chart and I'm thinking, you know what? It's on the 4-hour. It looks good. This is definitely a rejection at a resistance level, which I'm liking for a possible trade. And I then went down into the 1 hour, and I waited for price to give me a confirmation on this move right here. So I wanted to see like this move. I put a fib on it, and I wanted to see a confirmation of I believe a bearish engulfing candle on the 1 hour, something like that, just a confirmation of rejection. And I got that here. Like I remember like entering when we broke down that level. So this trade, I would not have found this trade without that signal, right? This one right here. And that signal got forwarded to Discord, and I wouldn't have found it. That signal came in at 11 p.m. yesterday. And without that signal, I would not have found it during, most likely not even during my market scan. So it's a pretty cool thing to have, because I just go to my alert log right here, and this is now my way of scanning the markets. I just go through all the alerts, and if there's anything I like, I take the trade.
Nice.
So
it focuses your attention where your attention needs to be at the moment. Really, it's really well executed.
So if anyone is watching this, and you have a system, a trading system that you have bought or whatever, created yourself, and you know that it's successful, you trade that system and that one system and it works well, I would highly recommend that even if you don't have the coding skills, you can go to sites like Fiverr or Upwork and find people that can code for you. Tell them your strategy, your system, how it works, and try to create an indicator out of that. Like if it's possible, it's worth paying, $500 to $1,000 for that, because you're going to get that money back easily if you're going to be able to simplify your trading. All right, so because I don't want to make this like a whole commercial about the indicator. I just want to show what's possible with a very simple, we're fairly simple code. I think I think we're done here. I think we have covered lots of good stuff today. We covered the FOMC coming up in the evening, and then tomorrow we have the inflation data coming out as well. And it's going to be interesting to see. I would love for you to let me know how that trade goes.
I definitely will. That's what my trading is about. Always, I want to be as transparent as possible. I'm going to do a live trading session there tomorrow also. So I'm going to be live at 12 p.m. UTC, and then I'm going to introduce, kind of like I did here, what I am planning trading wise there, and why I'm planning this, like my reasoning, my chain of thought, my hypothesis. So to say, we're going to witness then live a release, and after that, we'll see if I'm going to lose my remaining hairs here on the side as well, because everything went horribly wrong, or if my hypothesis is going to be true.
Well, I'm definitely gonna check that out. If I'm not doing my own live stream, I'm definitely gonna check out your live stream, see if I can try to maybe replicate your trades, because I think your analysis is correct. I definitely think that the probability of your analysis being correct is pretty high. Now it's just up to you to execute that without getting stopped out, because like the volatility will be extreme.
Yeah.
And let's be honest, you're most likely going to get stopped out, even with TP hitting or not. You're most likely going to get stopped out.
I'm going to say something about stop loss there tomorrow as well. I don't want. Well, I can say it today. I'm probably, because the amount I'm going to trade there is going to be low in comparison to my usual trade size. So I'm probably not going to use stop loss in the beginning of a trade when I open the trade. But this is something you normally would never hear from my mouth, because I'm the greatest advocate, always saying, like, remember to use the stop loss. But this is kind of a special situation, so I'm going to make an exception from the rule there. And maybe it's going to, bite me in the tail, of course.
Yeah, I've tried that as well, especially when scalping, and to have a open stop loss. And I remember like calculating where is the absolute stop, where do I absolutely have to exit the trade. but it never works out. Like I have a tendency of just saying like, oh, a little bit more, you know, let's
see, then in 2 weeks I'm going to come back here and say, I should have listened to you, Lib.
Yeah, but if I think you have you have way more experience than me, so you can probably trade more effectively with an open stop loss. Is for me, it's I don't know, man. I've just had bad experience with that.
Absolutely, I can understand that.
All right, man. I would like to thank everyone for watching, and again, follow Dirk on PrimeXBT Academy on Twitter and YouTube, and yeah, let's see what happens. And on our next live stream, we're gonna probably talk about how what we get from the S&P 500, do some more high time frame analysis, and see if our scenario plays out. Like I would say the probability of the S&P 500 coming down and testing the 3.4, 3.3 area quite likely now, and it's most likely going to happen if the inflation is higher than expected.
Yeah, I agree with you. Yeah.
All right, guys.
Good.
Thanks for watching, and thank you, Dirk.
You're welcome. Happy to be here. Enjoyed the discussion very much. Take care, everybody out there.
Bye.